In this video I'm going to analyze a Euro-dollar 5-minute chart using a few different elements, so you can get a hint of what you can expect in the future courses that will be released in the channel, and also how all methodologies you will be able to find here are compatible with one another. In this particular video I will demonstrate the surface of what you can do with pitchforks, which are one of my favorite tools to analyze the charts. You will also notice that I will be talking about elements from the fractal flow strategy and the market maker way of looking at price action. Before we move on to the analysis itself, please pay attention to how much price information I have available on the screen. The essential point is that you don't need large amounts of past price information to create a high-quality analysis of the market you wish to trade. The starting axis of our analysis is the undeniable fact that between numbers 1 and 3, price made a lower low in what appears to be the major flow of this market. This renders the high number 2 as a solid market structure because the sellers who generated it proved their point to the buyers from number 1. That is literally what has happened in this portion of price action. There is one other detail here that can be worth looking at. Take a look at the difference between market vectors from 1 to 2 and from 2 to 3. The first vector seems to be struggling to rise, while the second vector has no problem going down hard. Once again, simple logic tells us that sellers are dominant over buyers in this market. As you can see, we have subjective elements to say that, and we also have objective elements to say that. The subjective elements dwell at how price behave in between vectors. The objective element is the undeniable presence of a lower low in the chart. Needless to say, these two types of elements complement each other, and none of them should be excluded from the analysis in any way. Another detail that I want to talk about is at the beginning of the market vector between 2 and 3. I drew an arrow pointing out the fact that organized price behavior happened pretty much the entire vector. This is often a subjective claim, but in this case it's not, because after the black arrow pointing down, price action literally behaved in an organized manner all the way down. Every single candle created a lower high and a lower low without any exception. This happened for 8 consecutive candles. It would be naive of us to think this is merely a coincidence, especially when you remember that price action is not exactly an orderly entity. All of this means that we might have some sort of intervention in price action, which can only be done by large traders, of course. In this case, these large traders seem to be interested in a downtrend. Starting from this premise, I drew a short horizontal line precisely at the moment where the minor flow inside the vector between 2 and 3 turns down and the organized behavior starts to happen. There is good reason to draw this line in this level. The absolute turning point line of the vector between 2 and 3 is actually higher near the absolute high number 2. However, the lower turning point line I marked with the horizontal line seems to be more important because it was the moment where the big sellers actually decided to bring the market down. This lower level is subjectively more important than the higher one. Once again you can see that this battle between objective and subjective statements is indeed important for the whole analysis. After number 3, the organized behavior ceases, and price begins to crawl back up. This makes total sense because the sellers will eventually run out of energy potential at some point, no matter how powerful they are. When price begins to rise again, we can draw a pitchfork using these 3 points as axes. The way to draw pitchforks, and when and where you should do it, is a more complicated subject that will have to be fully unpacked in a course. What you need to know for this example is that pitchforks need 3 distinct points in the chart to serve as axes. When we draw the pitchfork in these 3 points, an upward sloping black pitchfork is formed. One of the uses of a pitchfork in a situation like this is to pinpoint the moment where the next significant market move will run out of energy by looking at the center line. The center line usually gives a rough estimate of that, and this rough estimate can be finely tuned based on the relationship between the outer lines and raw price. This is where Newtonian physics comes into play, specifically the Newtonian law that every action has an equal and opposite reaction. Observe that after number 3, price disrespects the lower line of the pitchfork, and then comes back inside the boundaries of the pitchfork again. This can be characterized as an overthrowing action that will generate an underthrowing reaction in the near future. In other words, an action that will generate an equal and opposite reaction. You can also observe that I measured this overthrowing action with a thinner black line that follows the same angle of the pitchfork, and I extrapolated this same distance to the center line of the pitchfork to create the underthrowing reaction. This is just one of many different ways in which pitchforks can work in alignment with various types of lines. This subject will be deeply explored in the video course about econophysics in the market. In number 4 we can see that a few different elements of our analysis converge to the same area, which is often an indication that we have a high probability trading opportunity in place. Price met the turning point line drawn from the organized behavior from vector between 2 and 3, and at the same time, it met the underthrowing reaction line pinpointed by our black pitchfork. Beyond that, we have a fractal candle in number 4. If you think about this for a moment, you will realize that these three elements come from three different approaches. The ideas about organized behavior come from the market maker methodology. The fractal candle idea comes from the fractal flow method, and the pitchforks come from the application of econophysics to price action. Notice how these three methods can be used in alignment to produce an incredibly rich analysis of the market. The short position you see opened in the chart came from the context generated by these three methods in combination. Another interesting thing here is the way that we can use dynamic targets with pitchforks. Observe that I drew a down-sloping blue fork using points 2, 3 and 4 as axes. This is obviously based on the assumption that number 4 is indeed a market edge. The idea of a dynamic target is to aim the target at a moving line. The reason for that is that as time passes by, a trader should be rewarded proportionally to his exposure time in the market. If we aim the target at the center line of the blue fork, we will definitely have a moving target that will benefit us. Let's see how the market develops. As you can see here, price hit our moving target in the red square, rendering this a successful trade. If you enjoyed this video, don't forget to click the like button, subscribe to the channel and activate the notifications, and to leave your feedback in the comment section. Thank you very much for watching.